18,035 on the Nifty.
130 points on the frontline index, 450 on the Sensex.
We are set for first close above 18,000 on the Nifty in the last 5 months,
which has narrowed down quite a bit. 1,100 stocks on the NSE are higher and 1,069 stocks are lower.
Hello and welcome to CNBC-TV18. You're tuned in to Markets Today. Well, plenty to talk about it with regard to what went on in today's trading session. First up, though, let's run you through the entire day's action in just 5 top headlines. The Sensex and the Nifty ended the highest levels in 5 months as the bulls rally for the 4th day running. The Nifty reclaims the 18,000 mark for the first time since early April. Financials lead the charge with the Nifty Bank Index closing at a 10-month high. HDFC Life gains after HDFC co-promoter Aberdeen sells its last lot of holding via a block deal. A minimum of 50% minimum promoter holding norm bars any further selling, which leads to a recovery in the stock price. SEBI chairperson says that 100% transparency is required to build trust in the capital markets, which are meant to facilitate capital formation. She tells corporates how they act, their disclosures and violations will be on SEBI's radar, not their business decisions. Government classifies 384 drugs as essential, which must be sold at prices set by the Pharma Pricing Authority. These include popular drugs used to treat diabetes, tuberculosis, HIV, among others. 26 drugs are deleted from the 2015 list of essential medicines. The COVID vaccines do not make it to the list. And the rupee strengthens to a 1-month high, bolstered by strong foreign fund inflows into the stock market. Support comes in from the dollar's decline against major rivals ahead of the US consumer inflation data. Well, here's what we have lined up on the show for you. In market opinion, we have Ashish Gupta of Credit Suisse. And the big corporate voice of the day, we have Ashutosh Raghuvanshi, the MD and CEO of Fortis Health. Well, the large street gains for the 4th straight trading session, with the Nifty as well as the Sensex hitting 5-month highs. In fact, the Nifty captured the 18,000 mark for the first time since April 4th this year. Financials led from the front, with the Nifty Bank ending the day at 10-month highs. Prashant Nair joins us to run us through all the market action of the day. Prashant.
Well, 18,000 is finally in the bag for the market, and the index doing very, very well. It's almost becoming routine, normal for the index to gain 100 points day on day, and today was no different once again. What did well? There was metals which stood out. There was also the FMCG and the private bank space which participated quite well. The IT services space, which sort of saw signs of life over the last 2 days, was not amongst the top gainers. Market breadth, though, narrowed quite a bit. I mean, almost came down to 1:1 by close. So maybe at the margin, you'd want to keep an eye on that. Some have, of course, also been pointing about the quality of the rally getting a little poorer, with lots of smaller names, out of favor names starting to participate as well. As far as Nifty stocks are concerned, a few names. Tata Consumer did very well. There was Titan, which was a top gainer. In the financial services space, IndusInd Bank, Bajaj Finance did well. Bharti, Britannia and L&T were some of the other large cap names which participated. Broader market is a long list of both gainers and losers. I'll just highlight a few. There was Tata Investment Corporation, Policy Bazaar, which was up over 10%. All Cargo, a logistics company, which is almost back at new highs. There were these rice companies like KRBL, Daawat, and many others which participated. What next? Well, the market, with all that it has done recently, leaves us at a position where it's just 3% away from an all-time high. 18,600 was the high, all-time high made in October 2021, and we're about 3% away. So will that come first before anything else? I think that's the big question. India by far has been the best performing market globally. In the very near term, later in the US, out of the US today, we get the August consumer price inflation numbers. Unless and until, of course, that is a big surprise, the market should move on with the sentiment being very, very positive here. Back Back to you.
Thanks a lot for that, Prashant. Well, in market opinion, Ashish Gupta of Credit Suisse is betting big on banks and is positive on the sector. He adds that NIMs and credit cost will surprise positively for the next 6 months out. Let's hear him out.
We definitely see that the risk on our earnings estimates are still on the upside. Although I would not peg it to inclusion in the bond index or really gains coming from bond losses being reversed, but more so from operational earnings. I think really in the last 15 years, we haven't seen the outlook for the bank so positive virtually on every front. Whether it is margins, whether it is growth, and of course on asset quality. And I think the bigger drivers of surprise to my mind over the next 6 months will be bank margins as well as credit costs.
Well, in more opinion, Mark Matthews of Bank Julius Baer said that many reports suggest that the US economy is in good shape. He added that even if there was a recession, it would be rather mild. He also said that foreign investors were just beginning to come to India. Let's hear him out.
I would generally concur with the idea that we will avoid a recession. Our own models suggest that. The Federal Reserve's models suggest that. And various economic data shows that the U.S. economy is actually in pretty good shape. I think first and foremost, the one to cite is the fact there's 11 million job openings, which is something like twice the number of people who are unemployed and actively looking for work. So if we do have a recession, I think it would be extremely mild because of that huge pent-up demand for labor. But also, the consumer sentiment surveys look like they're turning around a little bit. The University of Michigan one was reported recently. Long-winded answer to your question, I don't think there will be a recession in the United States. I think India is poised to go up a lot. And the reason is that what kept the market buoyant over the last year or so was local buying. And the local buying's still there through the SIPs. And I feel that locals realize there's a virtuous economic cycle in India. They can see it with their own eyes. It's the foreigners now who are starting to come to India. And I think they're just beginning to come into it. And I think to reiterate what I said earlier, people are looking for things outside of technology, outside of the U.S. They're looking for green shoots around the world. Where will the leadership come from?
Well, moving on to the second headline now. HDFC Life gained closer under % despite the company's co-promoter Aberdeen selling its last lot of holding by a block deal. A 50% minimum promoter holding norm barred any further selling. That's what led to a recovery in the stock. Yash Chen joins us to fill us in with more details on that front. Yash.
Well, Nigel, let's first address the news. Aberdeen PLC, which was earlier known as Standard Life, sold about 42 million shares, which represents about 2% equity in HDFC Life. Now, this particular block, as far as the buyers are concerned, what we've been given to understand, there are certain long-only funds which are buyers as far as this particular block is concerned. The block happened at 574 rupees, and Aberdeen PLC or Standard Life has raised about 2,400 crore through this particular block deal. Now, post this block deal, they are left with about 1.7% stake in HDFC Life. The answer to your second question, which is why HDFC Life closed in the positive territory, in fact, it was at 4.5% in trade. That is because today's block takes away the selling overhang from this particular stock. Though they are left with 1.7%, they won't be selling any more stake into the company, and that's because of the regulatory constraint that both promoters, that is HDFC and Aberdeen PLC, have to maintain a minimum shareholding of 50%, which means Aberdeen PLC won't be able to sell that 1.7% stake. What happens to that stake going forward? What we've been given to understand is that once HDFC or the merged entity, whenever that comes through HDFC and HDFC Bank, get the RBI approval, they are most likely to look at acquiring that 1.7% stake from Aberdeen PLC and take their stake to over 50%.
Okay, all right, Yash, thanks a lot for joining and giving us those details. Meanwhile, Ujjivan Finance Bank fell closer on 3% after the company said that it's looking to launch a QIP of around 475 crore rupees. Abhishek Kotari joins us to fill us in with more details on that. Abhishek?
Well, CNBC-TV18 exclusive news has been confirmed. Ujjivan has launched a QIP of about 475 crores. Now, we had mentioned that they are looking to raise anywhere between 400 to 500 crores. So, demand is strong. What we gather from our sources is that the demand has come in worth about 1600 crore or about 3.35 times of the QIP. There are, in fact, 4 bidders who have bid at least 100 crore or even more. So, SEBI floor price is at 21.93 per share. However, the indicative price set by the company is at 21 per share. So tier 1 ratio as per our calculation increases to 22.4% from 18.7% that they had earlier. Equity dilution is about 13.1%. The net worth increases by 15.8% to about close to 3,485 crore from earlier level of a little under 3,010 crore. So with a book value increase is seen just 2.4% to about 17.8 rupees per share from the earlier 17.4 per share on account of the heavy dilution seen over here in the QIP. Back to you.
Okay, thanks a lot for that, Abhishek. Well, moving on to the third headline today. SEBI chairperson Madhabi Puri Bhuj has made it clear that the market regulator will not interfere with IPO pricing by new age companies. However, she also added that companies need to make more disclosures. She was sharing her views on instances of tech companies seeking higher valuations, and then collapsing below that issue price. Bhuj said that a company is free to ask for a higher price, but they need to disclose what happened in the intervening period, which justifies this massive change in valuations. The SEBI chief went on to say that business decisions, well, they'll not be really scrutinized, but the regulator will crack the whip on violations. Let's hear her out.
A lot has been said about the pricing of the IPOs of the new tech companies. What is SEBI's view on that? Our view is simple, starting from the green. At what price you choose to do your IPO is your business. We have no business to suggest otherwise. The days of CCI are long gone.
Well, moving on then, Finance Minister Nirmala Sitharaman has urged India Inc. to invest without hesitation. Speaking at an event in Delhi, the Finance Minister asked India Inc. when foreign companies want to be in India, why are Indian companies reluctant to invest? She asked if the industry is behaving like Hanuman, who was not aware of his own strength. The Finance Minister also called on industry leaders to ensure timely payment to MSMEs, saying the responsibility to support small companies also lies with the private sector and not the government alone.
Since 2019, when I've taken charge of the finance ministry, I've been hearing, though the industry doesn't think it's conducive. All right, bring the rate down. All right, tax rate was brought down. And I keep defending industry, private sector, where even provocatively people have asked, what would you want to tell the private sector? We will do everything to get industry coming and investing here. Give PLI. We've given PLI. I want to hear from the Indian Inc. What's stopping you? When countries and industries abroad think this is the place to be in now, at this time, FDIs are coming, FPIs are coming, it's all, the stock market is so confident, the Indian retail investor believes in them. Is it like Hanuman? You don't believe in your own capacity, in your own strength. And has there got to be somebody, standing next and say, hey, you're Hanuman, do it. Support to the MSMEs is not just what government can give. It is certainly largely dependent on that. Now, I can push my PSCs, I can request states, I can make sure departments pay up, I can only appeal to the industry. For all the tears that we shed for the MSMEs, my tears, your tears, can we limit the time by which the MSME will get its due?
And V. Ananta Nageshwaran, India's chief economic advisor, believes that retail inflation inching up to around 7% in August is concerning, but it's manageable. In a conversation with my colleague, Parikshit Luthra, the CEA called for more administrative measures to control food inflation, added that measures needed to be taken to ensure availability of adequate foodstuff.
I'm not very concerned because this is to be expected given the base effects that indices normally face, and the market is also probably overreacting, the food markets, to the possible lower sowing on the rice crops, and therefore building in some expected shortage, and therefore the prices are reacting in advance.
How do you think India is poised in terms of managing inflation? Several steps have been taken. Restrictions on food exports, restrictions on wheat, restrictions on sugar, rice and broken rice as well. But somehow food inflation remains a concern. What more steps would be needed to manage inflation?
I think food inflation or fuel inflation do not get necessarily addressed by the central bank monetary policy except for second round effects. So therefore more administrative measures and ensuring adequate stocks and making sure that the availability is ensured for the needy segments of the population, and that would make sure that any increase in local domestic prices in response to international prices, it turns out to be as limited as possible. While we are concerned about 7% inflation, and rightly so, we must remember that compared to what other countries are going through, our inflation rate is highly manageable.
Well, time to slip into a short break, but you stay with us. We'll be back in a jiffy with the other headlines.